Good morning, everybody. Let us start today's session. I'm going to do sources of information and credit investigation. Actually, in our previous class, we have discussed about appraisal or evaluation of consumer credit facilities. Consumer credit facilities we have discussed in our last lecture. Yeah, of course, we had 5 C's we have discussed. There are so many things we were discussing. So many information we analyzed. The first C, the character of the customer. So there itself about the customer, so many information we gathered and analyzed. Yes, we had to do it. Similarly, all 5 C's, various information we had to collect and analyze. So, as a credit officer, you should know when an application for a facility is given, maybe a consumer credit, or maybe a commercial credit, or maybe a development credit, or maybe international trade financing. You have to collect information about those facilities and the customers. You have to collect information and analyze what are the risk elements in it or risk factors. So how can you reduce those risk factors? How can you provide safeguards? So for those purpose, you have to collect various information. So today we are going to discuss generally what are the sources of information for various facilities, for various type of customers. So we are going to discuss. So when you know, then you know, yes, about this facility, about this customer, these are the information I have to collect. So you know that one. So today, as a whole, we are going to discuss what are the sources of information for the credit investigation for various type of credit facilities and for various type of customers. That's what we are going to do today. Right. Principal objectives of gathering and analyzing information. That I have already discussed. Anyway, determining strong points about the applicant situation, about the applicant. So when you have the information only by analyzing what are the strong points about the applicant and his application. So that is an important thing. Then, on the other hand, recognizing weakness in the application. So strong points also you have to identify. At the same time, what are the weakness in the application? That is the risk factors. That is the risk factors you have to analyze. Learning about the operating peculiarities of the company and its industry. Yes, learning about what are the operational things about that customer, company. It may be a private limited level company or a corporate customer, and they may be operating in a particular industry. So what are the operating peculiarities about the company as well as in the industry where they are operating? So this will be important for our commercial credit, especially the corporate credit evaluation. This factor is very important. There also we are going to discuss. Then determining which peculiar factors are crucial to the proposed borrower's continuing success. Again, risk identification. Determining which peculiar factors are crucial to the proposed borrower's continuing success. For all these things, you must collect the information about the applicant as well as his industry and the facility he is requesting. So these are the principal objectives of gathering and analyzing information. But there can be some trade-off in the case of certain type of customers. Yes, now because you have already collected information about that customer, it may be in your files. You may remember we were discussing about relationship banking versus transaction banking. We were discussing. relationship banking and transaction banking. From the transaction banking, we have switched on to the relationship banking. So in the relationship banking, we establish a continuing relationship with the customer. And we do cross-selling. So customer and about his family, about his business, we collect information, we gather. We were discussing, you may remember. So in that case, you are having the information about the customer and you have to collect only the additional information. So there can be a trade-off. Depend on the track record of the customer. If the track record of the customer is good, already he is your customer, you have most of the information about him with you. So in that case, there can be a trade-off. So amount of information is already with you. So now you have to collect only the additional information about the customer. So the collecting information is very about the customer and his business and his loan facility is very, very important. Good loan decision is the result of good loan decision making. Good loan decision making is the result of gathering as many facts as possible quickly about the applicant. I don't need to explain that one. Yes. Determining which of the information is important and relevant to the loan decision. Then expertly analyzing and interpreting the meaning of that information. Constantly reviewing information to identify failure and success. So as a credit officer, you have to keep in mind all these facts as a credit officer. And expertly analyzing and interpreting the meaning of that information. So there you have to develop your skill. One thing you must know, you have to have the knowledge about this thing and you have to develop your skill for expertly analyzing and interpreting the meaning of that information. That of course, again and again when you do, automatically it will come. Expertly analyzing and interpreting the meaning of that information. Sources of information. So what are the sources of information? Applicant himself will provide and his application. Then financial statements, annual reports, project reports, business plan, bank records, bank references from other banks, finance or leasing company, then credit reports or credit rating. These are from credit information agencies. In our country, it is CRIP we were discussing. And then credit reporting and credit rating agencies. Then trade associations. There are trade associations. Then informal sources. Other sources of information. There can be informal sources. Suppliers, buyers, customers, employees of that enterprise, competitors, friends, relations, business circle, then bankers, then applicants, accountants, legal counsel, insurance agents, consents with applicants' consent. Then there can be public reports, then there can be media reports, current information, newspapers, TV, business magazines, internet, and finally, customer interview, that also for collection and for you to decide. And finally, the inspection, that also to collect information and for you to decide. So these are the various sources of information for you to make your credit decision. So this covers all type of applicants, all type of enterprises, all type of facilities. Applicant can be sole proprietorship or partnership or a private limited liability company or a public limited liability company or a corporate customer. Similarly, the purpose may be consumer credit or maybe commercial credit or corporate credit or trade financing Yes. For all sort of things, these are the sources of information. So depending on the applicant and this business, you collect. This you must know where to collect. As a good credit officer, you must know where to collect, how to collect the information about the customer and this venture. Applicant and application. One by one we go. There can be individual, joint, or institutional applicants. Maybe individual customer, mainly for consumer credit facilities, right? Or maybe joint customers or institutional applicants, right? So applicant and application, there can be, yes. And for each type of applicant, there are different application forms. You can see in your own bank or own institution. For the individuals and joint applicants, in the institutional applicants, there can be, yes, different type of application forms. So in the application, various information are required for the customer to perfect. But I have seen the credit officers won't give much attention to the application. When the customer comes and gives the application, they take, okay, thank you. They just keep it in the file and wait. But the application itself, there are so much of information the banks are asking from the applicant. So when the applicant gives the application, you must go through it, see whether all cages are filled properly. In some time, some cages may be not applicable for the facility or in regard to the customer. So in that case, he has to say it is not applicable. But all the cages in the application should be filled properly. If it is not sure, if it is not done, you have to return the application to the customer. Look here, kindly fill all these cages. Otherwise, you just keep it in your file, and after, when you are going through the application, this thing is not there, this thing is not there, then again, wastage of time. So then and there, it may take only 5 minutes. When the customer gives the application, go through it and ask him to perfect it completely and return it. Okay, so that is your duty. As a good credit officer, you have to do it. Right. So in the application, purpose and amount of loan. Yeah, for what purpose? So now one by one, we are just going through. What are the information required in the application? Purpose and amount of loan. Right. Then identification. Whether personal or family or enterprise information. That is called for, that is required. Then banking information. Banking information. Which bank they are maintaining account, what type of accounts and all those things, yes. Then financial standing. Financial standing. If it is an individual or joint application, salary, and in other cases, income and expenditure, assets, liabilities, obligations, all these things are required to fill. I have put a certain dotted line for you to mention. What are the other information you can find in the application? What are the other information are called for or required in the application? Yeah. Anyone? Just please tell me. Anyone? No one? Okay, anyway. Yeah, that's right. Item 4, financial standing. Yeah, of course, salary, income and expenditure, asset, liability, obligations. Yeah. Then additional information. Then 7, collateral offered for the facility, what type of collateral they are offering. Then there will be a declaration. The above statement is true and correct and those things and everything. Yeah. Then 5th one, most important one, whether he has been found guilty. Yes, that has been asked, whether he has been found guilty. That will be there. And some more information. Some more information. Account details. Account detail, that is already called for. So account detail. Then we have mentioned assets, liability, obligations, various obligations with various banks, account details, so many things have been required to be filled in the application form. Kindly go to your bank, take an application form and go through it. See what and what things have been required in the application form. So there are different types of application form depending on the different type of customers, individual, joint, institution applicant. Yes, you can. Then documents submitted with the application. So some documents have to be submitted with the application. And you will submit some documents. In the case of personal or joint customers, NIC, National Identity card, then bank details, salary receipts, yes, you have to submit. Then in the case of business customers, business registration, I have already told you. Business registration, the business is registered with the provincial registrar of company registration. And then business license also, in the case of companies, or in the case of enterprises, they have to obtain from the local authority business license, they have to submit. In the case of companies, they have to submit certificate of incorporation, that is registration of the company with the registrar of companies, that is certificate of incorporation. Then earlier, of course, it was memorandum and article, but now it is article of association. Now it is not memorandum. Now it is articles of association. Then form number 20 about the changes of directors of the company. Then there is a thing you have to fill. Anyone? In the case of company?
Board of Resolution.
Sorry?
Board of Resolution.
Yeah, that is, yes, actually, resolution, board of resolution of the board for borrowing. Yes, very good. Thank you. Resolution, board resolution. That is very important thing. The board of directors of the company to decide how much to borrow, for what purpose, from which bank, which branch. Yes. So that board of resolution signed by one of the directors and the secretaries to the company. Then the taxation details. That of course can be a payment slip that they have paid the taxes, or maybe if it is done through the auditors, then the auditor's certificates. So in the case of taxation detail, payment slip, and the certificates issued by the auditors of the company, that is the payment is made. And what are the other documents? Anyone? In the case of companies, what are the other documents they will give? One is, of course, yes, additional one, the board resolution is there. Then their business plan they have to give, or project report the company has to give. Then form number 1, that is original directors and the shareholders and the secretaries, that they have to give. Maybe at the time of opening the account, they would have given that one. So these are some additional documents they have to give in the case of companies. So these are providing information to us. We have to, now we collect all these things and we will go through it. We gather information with this from these documents. Then the financial statement. It can be audited or unaudited or draft, the financial statement. And there is, financial statement, you all know, or you may learn later, profit and loss statement, P&L, balance sheet, and the cash flow statement. Together we call financial statement. Yes. If it is an operating company, yes, we generally tell them to bring last 3 years financial statement. It may be audited. So audited means the financial statements have been prepared by the company accountant. Then it is given to the auditors, chartered auditors, for them to go through it. And finally, the document is signed together with their opinion, auditor's opinion. The financial statement signed together with their opinion. Then we call it as an audited financial statement. That is audited financial statement. Unaudited means the company accountant prepare the financial statement, hand it over to the auditors. Auditors have audited it, but not yet signed together with their opinion. That means there can be amendments to this financial statement. Since the auditors have not signed it, then there could be some more amendments to the financial statement. So that type of statement, we call it unaudited. So now you know the difference between audited financial statement, unaudited financial statement. Then the draft. Draft means the company accountant has prepared the accounts, financial statement. It is not yet audited yet. That is the draft. So audited, unaudited, draft. Maybe the recent one may be a draft. All other things may be either unaudited or audited. So when you analyze it, you must know whether it is audited statement or unaudited or draft. If it is a draft, there could be more amendments. If it is unaudited, still there could be amendments. The audited, it is a final one. Okay, so financial statement also they will give with the application in the case of companies. Then the annual reports. In the case of public companies, they prepare their annual reports. In the case of public companies, they prepare their annual reports. So in the annual report, you all are working in various banks. At least your bank annual reports, you would have gone through it. You would have seen. Banks and finance companies, you would have seen the annual reports. So in the annual reports, what are the information given? Obviously, chairman's statement will be there. Then the directors or CEO report will be there. Then general information of the business is there. Then the shareholders details will be there. Auditor's report, audited report, the financial statement would have been annexed, and the auditor's report will be there. Yes, financial statements will be there. Accounting policies and notes to the accounts will be there. If you would have gone through these annual reports of public companies or your banks, you would have noticed all these things. What are the other information you can find in the annual reports? You would have gone through your annual report of your bank where you are working. Please, somebody, please tell me what are the other information you can see in the annual reports? Or at least in the first page or in a cover of the first page, some important things will be there. Anyone? Annual reports? No? In a cover or the first page, you can see very important vision, mission, and objective and values. In my earlier lectures, I told you the credit culture of the institution, lending institution, come from those values. So if you are not knowing the values of your institution, then so the inner cover of the first page, mission, objectives, and the values of your institution, that is there. Right. Then, what are the other information you can find? There may be risk analysis will be there. If it is a bank annual report, obviously, what are the risk analysis? Various types of risk. Various types of risk they mention. Then the market information will be there. And then corporate responsibility report will be there. Corporate, yes, responsibility, that report will be there. Then what they have achieved in the past, the maybe they may give in the heading milestones of the company, what they have achieved, what are their new vision, what are they going to do, what are they going to, how they are going to achieve their new marketing strategies. All those information will be there in the annual reports. That is corporate social responsibility, CSR. That is also another important thing for the big companies, corporate social responsibility, CSR will be there. So these informations are there in the annual report. By going through, you can, yes, take the necessary information for you to analyze the credit request, annual reports. Then the bank records. This also yes. So bank records of the customer. Performance of the accounts. Performance of the accounts. One is current. Maybe a personal borrower, personal customer, or business customers, they may have their current accounts. So by going through the current account, you can find out, analyze how the cash management of that particular customer. How the cash management is very important. Before you are granting the loan, you should know how this person or this company managing their cash management. What are the sources? What are the users? What amounts coming to the account? What amount going out of the account? So that's it. Highest balance. You analyze the lowest balance. What is the average balance? Total deposits for a period. Then total withdrawals. And whether there are any check returns. All these things you analyze. Those days, of course, we had to do it manually. Those days it was done manually. But now it is one computer. So immediately you can get all these information within no time. So then cash deposits, if they are having credit cards, how they use their credit cards. You can collect this information. Then they may maintain deposit accounts. So how is their savings habits? How is their saving habits? Regularly they are saving. How is their saving habits? Then in the case of loan accounts or credit card accounts, you have to analyze. You can collect information for you to analyze. Types of facilities obtained, honoring the obligation, whether they are regular or irregular. Then you can collect information from default records, whether the customers are willful defaulters or non-willful defaulters. Sometimes beyond any reason, beyond any control, there may be failures. So they are not willful defaulters. They may be non-willful defaulters. Then other details, various other business information. Now, of course, central bank instruction, know your customer. So there also you are collecting information. Know your customer. That is under central bank instruction. All banks branches are collecting from their customers. So other details, the business information you can collect about the customer for you to analyze. So these are the sources. These are the various sources we are discussing now. Then the bank references. Bank references. That is status report. We call it status report from other banks, finance companies, leasing companies. Actually, we were collecting this one those days. Those days. So when a customer come to a particular bank, a branch, asking for a facility, okay, giving the application, then the manager write to the nearby branch, nearby other branches of other banks. In the close vicinity, he will write, please provide information about this particular customer. He will send a letter. Then those branches, they will give a status report. They will send a status report about that particular customer. But that is not comprehensive. It provides only some indication, provides an indication only. Provide an indication. So they mention conduct of the account. The particular customer maintain a regular account. Something like that. And the credit facility is also something like that. Credit facility is obtained, they may give. That is provide an indication, not the detail report they will provide. We call it status report those days. So the branch manager obtain the status report from the close by branches of the other bank and keep it in the file to see he has obtained this information. And it is not comprehensive. The status report is not comprehensive. You can't you can't decide anything based on the status report. But now, luckily, the CRIP is there. CRIP report is very, very, very comprehensive. So since the CRIP report is available now, the branches managers, they don't obtain the status report now. Then the credit reports about the customer. Yes, that is the one, Credit Information Bureau. CRIP, Credit Information Bureau, obtain the report from the CRIP. CRIP report is very, very comprehensive. We will see that one. Then there is another organization, Dun & Bradstreet. This is, of course, internationally for you to collect information about the international customers. The Dun & Bradstreet, they provide, when you request, you have to make a payment. So when you request, they provide the customers of other countries, customers from other countries information, they will provide. Dun & Bradstreet. Earlier, they had the office at Bataramanga. Now, I am not sure where they are operating now. Similarly, the Fitch International, they also provide the information about the customers abroad, the customers on other countries, they will provide. So you can call for credit reports. In the case of local customers, then Credit Information Bureau, CRIP, or in the case of offshore customers, that is abroad customers in abroad, foreign countries, Dun & Bradstreet or Fitch. Especially the import and export businesses, the Dun & Bradstreet reports are called by the importers or exporters and by the banks also. Credit Information Bureau. That is, yes, CRIP report. What are the information available in the CRIP report? I hope you all would have gone through the CRIP report. If anybody hasn't gone through the CRIP report, please, in your branch, please ask the credit, please from the credit officer, obtain and go through it and see. Because as a credit officer or the credit manager, for you to do your credit evaluation, appraisal, this CRIP report is very, very, very important. And apart from that, interpretation, how you will interpret the information given in the CRIP report is very, very important. If anybody who are following this program and not seen the CRIP report, please speak to your credit officer in your bank branch, get a CRIP report and see, and from them, find out how to interpret this information. Right. Available information. Name, address, NIC number will be there. As a borrower and as a guarantor, what are the facilities he has obtained? As a borrower, as a guarantor, what are the information? Those information will be as a guarantor, how much loan he has guaranteed, or as a borrower, what amount of loan he has borrowed. Then the facility type. What is the facility type? Various. Loans or overdraft, leasing, hire purchase, all those facility type also there. Right. And there may be some other information I like to find from you, participants. Yeah. What are the, just please tell me, what are the other way? The people, I know there are people who have seen this CRIP report, and sometimes you would have analyzed it also. Please tell me, what are the other information? I don't ask many information. There are many information. At least 3 additional information.
Dishonored check details.
Sorry?
Dishonored check details.
Very good. Yeah, check returns and anything. If there is check returns, yes, that's also given. Fine, yes, fine. Any other information?
Recent inquiries.
Yes, very good. Yeah, whether this customer is making inquiries from other banks for the facilities, recent inquiries from other bank, whether this customer, very good, yes. Any
Reported
more?
locations.
Sorry?
Reported locations.
I couldn't.
Reported locations. Address changes.
Sorry?
Address changes.
Address changes, yes. Okay, yes, address changes, right, yes. Then,
repayment records,
sorry?
last 2 years repayment records.
Okay, very good, yes, repayment records, yeah. Regular, yes. How much outstanding, all those information, very good. May I know your name? Hello? May I know your name, please? Anyway, good, thank you very much. Thank you, yes. Yeah.
I am Lakpriya, sir.
Sorry? Lakpriya. Okay, fine. Thank you, Lakpriya. Thank you. Yes. Then there is
Employment details.
Sorry?
Employment details.
Yeah, employment details. Yes. Facility type, employment detail. And then another thing, the particular customer, now about whom you are getting this CRIP report, if he is a director of another company, that details also given. Now customer may ask you a facility, you are calling report in regard to this one about that particular customer. But if the customer is a director of another company, then those details also will be. Yes, there are so many information. So my advice, Lakpriya has given some more information. Very good. So similarly, the participant who have not seen this CRIP report, please get a copy. Please speak to your credit officer, get and go through, and how to interpret it. That is very important thing. How to interpret it, from which branch, what is the date of granting, when it is outstanding, all those information. Very comprehensive. And now, of course, they are going to collect information about telephone bills payment, water bills payment, electricity bill payment. Those details also come into this CRIP report in near future. They are going to do it. This information also. And it is available through internet. For the bank managers, yeah, use their password, they can collect the CRIP report in regard to a particular customer. And I told you the information coverage to be expanded. Yeah, they are going to get the information about the bill payments, that is electricity bill, water, utility payments. That also they are going to include in this CRIP report. Okay, right. Fine. Then the credit rating. Company rating provides an indication. Now, certain companies, what do they? Earlier also I have mentioned this one. to show their credibility, their financial standing, they do the credit rating by some external credit rating agencies, some companies, and publish that in the papers to show the general public they are in a good financial standing. The company is very strong. So the external credit rating agencies go through the books and information about this particular company, and after doing various analysis, they will mention what is the credit rating. So they may give A plus or AB plus, AB minus, various. So that will indicate, this notation will indicate how is the financial standing of this particular company. So company themselves, they request the external credit rating agency to rate them. So that will give business strength, vulnerability for internal and external factors. Based on that one, they give the rating of each company, carried out by international local rating or local rating agencies. So Fitch International, yeah, and Fitch also having a branch in Sri Lanka, Fitch International rating, and then Standard and Poor, that is another rating agency, international rating agency. Similarly, in Sri Lanka, there is Lanka rating agency. So these are the rating agencies. Through them, the companies can get the company's rating they can carry out. So these also will be helpful to the credit officers to make their decision. The credit rating report also helpful to the credit officers. Then the project reports. Company may prepare a project reports in the case of business, or business report, or business plan, or project reports. They may prepare and hand over to the bank about their business ventures. What are they going to do about their project? So this is also, most of you would have seen the project reports. The customers would have bring and given to you about their proposal, business proposal, project reports. What are the contents of this project report? What are the major contents you can find in the project reports? Yes, this also I like to get from the participants. Please give what are the major contents of this project reports. At least some would have seen the project reports.
Total budget.
Sorry?
Total budget.
I don't know. It's not clear to me. Please, once again.
Total budget.
Okay, budget. Yeah, okay. The financial analysis. Budget. So what is the budget? Yeah, right. Financial analysis. They will give. Yeah, they will do financial analysis of the budget. Very good. Right. Then,
future cash flow of the business.
Sorry?
Future cash flow of the business.
Yeah, that is coming. Yeah, that will coming in the financial analysis. The cash flow, projected profit and loss, projected balance sheet, then projected cash flow, all those things. And the financial analysis, this will come. Very good. Yes.
And the time duration, time period.
Time duration about what? Time duration, yes, okay. That is in the case of projection, year 1, year 2, year 3, year 4, they will project it. So that is one. And time duration for them to commence the project, yes, that will be there. I am asking the major headings in a project report. One is the budget or the financial analysis that will be there in the project report.
Purpose.
Yes. Huh?
Purpose, main purpose.
Yeah, purpose. Yeah, purpose. Yes. Yeah, project design and the purpose. Based on the purpose, the project design will be there. Okay. Yes.
Employment details.
Okay. Employment details. Yeah. Okay. Yes. How many people will be employed? How many people will be employed in the new project? Yes. Employment detail. What and what category? Yes. That will be given. Yes.
Competitors,
Sorry? Sorry, miss, please. Yes.
competitors and marketing.
Marketing. Very good. Yes. Marketing. Marketing details. Marketing will be there. Marketing analysis will be there. In any project report, whether it is product or services producing, and then the marketing will be there. Marketing, yes, marketing will be there. Marketing details will be there. Under that one, how much they will sell, all those details. What is the income anticipated? Everything will be there. Right, yes. Anything else?
Environmental,
Sorry?
environmental,
Environment, yes. Environment analysis, yes. We call it pest analysis. We may learn it later. Environment analysis. How far the project is, friendly with the environment. How far the environment is suitable for the project. Environment analysis. Environment analysis. Yes. What else? No, because these are given in the project report. When you analyze the customer's loan request for a particular project, these things you have to consider and see whether there are any risk factors. The customer may give environment is good, suitable, that one, this one, but you have to analyze and see whether there are any risk elements. Yes, miss. Yes, please. Yeah, what else? Environment details, environment analysis, we call it. And another important project details they should give no. What they are going to do when the project or venture or new business or expansion of the business, then what are they going to do? In the case of project detail. In the case of business expansion detail. In the case of a new business, new business detail. Business details should be given. Then if there is any technology involved, technological aspect, technology details should be given. If it is an industrial project, so how the industry production or services will be done, that details will be given. If it is an agricultural project, yeah, how the particular plants or the crop are grown, whether environment is suitable, all those things will be there in the case of. So depending on the type of the project details will be there. Technology involved in the project will be there that they have to mention. Then finally, whether there are any economic benefits to the country concerned. Economic analysis. Through this project, how far the country is benefited. Economic analysis will be there. So all these details will be there in the project report. Somebody told the employment details here. That is human resource management, administration, how this will be administered. What is about the human resource, employment, management. So all this information should be there in the project report. Then only as a credit officer, you will analyze. Find out whether there are any risk. So project reports, business plan also will give you information about the customer, yeah, and the project proponents. Who are the people promoting this business? About their details, about their age, name, about their qualification, their experience in the venture, in the project. That will be given. So from those things, those are the information, then you will analyze and see. Right. Then the informal information. So these are the formal information. There can be informal information also. Informal information. So what types of information? So that also you have to collect. Informal information also will be helpful to you, for you to analyze. So these informal information, types of information can be about their market, can be about their product, can be about the internal matters, can be, if it is a family concerned company, about their family, whether they are in family disputes. There are so many companies, family run companies, even in Sri Lanka. I don't want to mention. Recently, family, the father died, then the two sons, they got separated. They divide the business into two. This type of things happening. So type of information, the informal information, whether there are any family dispute, whether they have any marketing problems, whether they have any production problem. So through the informal sources, you can gather these information. You know, in India, the Reliance, they are the very big company, Reliance. They are in oil, they are in, you name it, any industry, they are very large company. The father was running that company, Reliance International. Father died, two sons. Among themselves, dispute. So their mother went and they divided the business into one for one son, other for other son. So both are running separately. When it was there together, it was a great enterprise, Reliance International in India. So in Sri Lanka also there are cases. Recently some case, I don't want to mention. Big company. So these things, of course, this won't come, it won't come in any formal way, it won't come, this type of information. You won't gather through the formal way. It has to come through the informal way. So types of information. Then the credibility and dependability. So that is, you have to use how far you can depend on this informal information. Whether it is credible, how far you can depend on it. That you have to, yes, decide. You got some information, informal information about a company. Yes, okay, then, but you have to see, you have to, whether it is true or not, credibility or dependability, you have to decide. Then the public reports also give information about the industries, where your customer is operating. Yeah. Now, one is central bank report. Central bank on and off publish. They do the analysis, they collect the information and publish reports on various sectors, various industries. Those are very helpful. Those are very helpful. Central bank reports. Central bank, their sales point is there. Central bank office is central bank building itself. So you can find out whether if your customer is someone involved in a particular industry, you can find out whether they have any reports on that industry. Then the trade associations, chambers publish journal. Then Colombo Chambers of Commerce, very old institution, Colombo Chambers of Commerce, that is affiliated with so many chambers, provincial chambers, district chambers affiliated. They also publish reports. And they give business environment and various data they are giving, chambers. And I think these provincial or the district chambers, they may not prepare, but they have the data. They don't publish any report, but the Colombo Chambers of Commerce, of course, they publish journals. They publish reports. They have a lot of data. And business environment data. Then the trade association. There are trade associations. Some trade associations also affiliated to these Colombo Chambers of Commerce chambers. Now, Exporters Association, Fruits Exporters Association, like that. Then Garment Exporters Association. There are so many associations, trade associations. They publish reports also. And those reports will be helpful, maybe relevant to your customer if your customer is doing that type of trade. So you can collect information. So reports published by department. Then reports published by Department of Commerce, Export Development Board. They also publish reports, and apart from that, they also have enough data and information. If your customer is an exporter of particular item, you can collect information about the export market potential from the Export Development Board or by Department of Commerce. Department of Commerce also periodically they publish reports. Their offices are in the Navam Mavat, Colombo, Navam Mavat. Navam Mavat is, you may know, opposite Navaloka Hospital, Navam Mavat. Yes, their NDB head office also there. There you can. This Department of Commerce and Export Development Board both are there. Then Commodity Brokers Report, Tea Exporters Association, Commodity Brokers, Rubber Exporters, Coconut reports are available. They will provide you valuable data about those industries, about the relevant industries. And share brokers issue company analysis. Share brokers, Colombo Stock Exchange, Share Brokers Association. Share Brokers Association, they also issue company reports. Some on the request of the particular company, they issue company analysis. So that will be helpful. So these are all called public reports. Actually, if you want to know more about this this institution like trade association, chambers, please, you can go through the internet website. You go and type Sri Lanka public reports. You go and type Sri Lanka public reports in the website. So in the internet, so then you will get. So peacefully you can go one by one. Necessary institution you can contact and you can collect the information. This is public reports. Right. So these are the sources of information. So from all these sources, now you know what are the sources. So when a particular customer or a particular industry, you come for the facility, you can collect the relevant report from these sources and for you to analyze. Okay, correct. Then another source is the interview. So interview also for you to collect information about the customer. Once the application or the other analysis are satisfactory, customer will give a application form, customer may give a project report. So when those things are by doing analysis, evaluating, if you are satisfactory, then you go for the customer interview for you to collect the additional information. Right. Importance of customer interview. Understanding the business operation. So with discussing with the customer, you can understand how he is operating the business. Understanding the business operation. Understanding the purpose and amount of credit requirement through interacting. So while discussing one by one, you can really understand what is the purpose and what is the amount required by the customer. It is already there in the application and the project reports and various other reports. It may be there, but now you are analyzing, interacting with one. You see whether it is correct or not, or whether you can reduce it, or whether you can. Then verify available information. But sometimes some additional information may be available with the customer. And that's what collecting additional information. So for this purpose, the interview is useful. Understanding future plan and prospect of the business. For all those things, you are having the interview with the customer. So now, when you do the interview, this, of course, you have to develop that skill. Interview skill you have to develop. Generally, after finalizing the evaluation of the other available information, then you will call the customer for the interview. So in the case of, you must give him the date and the time for the customer. The interview, you must give the date and the time. The customer when he comes, of course, depending on the customer, if it's maybe a big director of a big company or big business, so you can go and invite him. You can go and yes, welcome. You can give him Sinaiboan here. You can welcome the customer, offer him the seat, and then depending, then you can offer the tea or other thing, and you can have the discussion with the customer. And you must see whether the customer is telling you all the truth and everything. He is with the integrity. So you must have the skill to judge it. Whether the customer's his integrity, you have to judge. So these are certain things you have to follow while doing the interviewing. Before the interview, check all the documents, including application and business plan. Right. Before the interview, you have to check everything. You have to prepare yourself. You have to prepare yourself. Mark and highlight the shady areas and items need further clarification in those documents and make notes to facilitate cross-checking. So you go through all the available document with you, mark the shady areas, certain things you may not understand, certain things you may ask for clarification, so mark it. Make notes to facilitate cross-checking. Prepare for an open, straightforward interview. Prepare for an open, straightforward interview. Then if the interview is successful, good. If you are satisfied with everything, with the interview also, customer behaved well and customer told you the truth and everything, you can judge. Then if you are satisfied with the interview, then you have to carry out the inspection. You have to carry out the inspection. Inspection. If you are satisfied at the interview, give a date and time for the inspection at the end. Two scenarios in inspection. One is existing business or enterprise. So you may inspect the existing business or the enterprise. Or it may be a new business, enterprise. So these are two scenarios. In the case of new business, so there may be nothing, only the land and those things. But sometimes there may be some assets also may be there. But in the case of existing business, yes. This is a running business, existing business. So there will be a lot of things you have to see and observe. Prepare groundwork for inspection. Prepare groundwork for inspection. Go through already collected information and make notes. Items to be checked. What are the items to be checked? And details to be looked into. Questions to be asked. Make a visit plan. So you must prepare yourself. What and what things you are going to check and what and what questions you are going to ask. So you have to make a visit plan. Inspection. Existing business. Existing business. Inspection. So you are going, check the name board for name of business and address. First of course, you must see whether you have come to the correct place. Whether you have come to the correct place for the inspection. So that is by check the name board of the name for the name of the business and see whether the address is correct. Cross-check with the business registration. Cross-check with the business registration and other available records with you. Check the asset and liability position. Check the level of operation. These things you have to check. Present asset position. Present asset position. So now you have gone on inspection. You have to check. You are checking. So it may be an existing business or there will be present asset position. What are the fixed assets available? Land, buildings, plant and machinery, vehicles, other fixed assets. Other fixed assets. Check. So check their condition, the age of those fixed assets. If it is a plant and machinery, the capacity of the fixed asset. Yes. Need for additional assets, whether they need any additional assets. Maybe they would have in the application or project report, they would have mentioned they need additional assets. So whether they need for the additional assets. Similarly, current assets. Check the current assets. These are also collecting information. Inventory. So inventory or stock in trade. Raw materials. What are the raw materials? Work in process. Finished good. Packing materials. Whether there is any obsolete stock or whether there is any obsolete stock. Obsolete stock means the stock cannot be used or cannot be sold. Maybe due to various reasons, maybe outdated. Date of expiry should have passed. So even finished good also date of expiry has passed, or even the raw material also maybe date of expiry would have passed. So that is obsolete. That cannot be used. Maybe in the case of certain item, the fashion has gone. So you cannot be sold that one. Maybe in the case of garment, the fashion has gone. Now nobody will purchase this. So that also obsolete. Cannot be used or sold. Obsolete stock. Then consignment stock. You have to look for those stocks. You are looking at the current assets, stocks, inventory or stock in trade. Consignment, whether there is consignment stock. Consignment stock is the supplier of the stock give the stock to the customer. You sell and pay. That is consignment stock. You sell the goods and then pay. So the consignment stock, when you look at, there may be consignment stock. You may think this may be this customer's stock. No, it is not the customer's stock. It is given on consignment by the supplier for the customer to sell and pay. So that when you may think his asset value, current asset value may be increased because of the consignment stock. So if you understand, if it is a consignment stock, that has to be removed from the books because it is consignment stock. Then whether the stock is mortgaged to other banks. Sometimes you may go and see there may be good stocks. Sometimes those stocks, because the customer may bank with various banks, they would have mortgaged the stock to the another bank. He may say, no, this I will give you for the mortgaging. No, you have to check it. Then the debtors. Debtors mean this customer would have sold items on credit to various customers. This particular customer, where you are doing the inspection, would have sold his products to various customers on credit. So that is shown in the book as debtors, trade debtors, or amount receivable mentioned in the books. There may be NPAs also. Customers would have bought on credit, but they didn't pay. Maybe more than 3 or 4 months, not paid yet. Those are NPAs of the customer. NPAs, non-performing advances for the customers. So in that case, you have to do age analysis. You have to do age analysis. Age analysis means this: take the debtors or the amount receivable, date amount receivable, debtors, do the age analysis. Say who are outstanding for more than 2 months. You have to separate them. You have to separate them. That is, we call it age analysis of debtors. Debtors, age analysis. So depending on the case, sometimes you have to do the age analysis. In the current liabilities, current assets you have seen, in current liabilities also, you have to see, go through the books. So you are going on the inspection. Creditors, who are the creditors? So this company may purchase items on credit, raw materials or trading goods, they may purchase on credit. So they are their creditors, whether this company is paying them regularly. That also you have to look at them. whether this company purchase item, in case if this company purchase item, raw material or maybe trading goods, they would have purchased on credit from other sources, whether this company is paying them regularly. You have to see. These are current liabilities. Then the accruals. How about the electricity payment, telephone payment, water payment, other utility payments, the accruals? You have to check whether the applicant's payments are regular. Whether the applicant's payments are regular. You have to check. Whether there is sign of overtrading. Whether there is sign of overtrading or adverse trading or liquidity run. Yes. What is the meaning of overtrading? Just a minute. Right. Okay. What is the meaning of overtrading? I want to use the board, so you can click the whiteboard and you can see the board clearly. I want to use the board. Really, also, I think I would have mentioned this one to you all. This investment capital investment on assets. Capital investment on assets. So that is capital assets. Or we can call it fixed assets. Fixed assets. Capital investment. Or fixed investment. Or fixed investment on fixed assets. So what are the fixed assets? Land, building, plant and machinery, vehicles, other fixed assets. Land, building, plant and machinery, vehicles, other fixed assets. These are the capital investment, fixed investment, fixed investment. Other one, working capital, investment. So working capital means raw material, work in process, finished good, debtors, or credit sales, maybe some advance payments, we call it with we say fixed investment. Both are capital, the fixed investment. So the money tied up. This is on fixed assets. So this is the investment. So money tied up in the fixed assets, that is fixed investment. Money tied up with the raw material, with the working capital investment. Yeah, money tied up. That is the working capital. Money tied up in this current asset. We call it current assets. These are current assets. Money tied up in the current assets. Now, for a business to operate smoothly without any break, well, for a business to run smoothly without a break, that business may have certain targets. Targets may be to produce this much of item and to sell this much of item in the particular year. In a particular year, we will produce this much of item and sell this item. That may be the plan. To achieve that plan, without any break in the operation, they must have sufficient working capital. They must have sufficient working capital to achieve their target of the plan for a particular year. They must have pre-decided raw material, they must have pre-decided working process, they must have finished good, they must have necessary debtors and credit sale, they would have paid advance pay. So the money tied up in these current assets should be sufficient to achieve the target of production or the sale. To achieve that target, they must have the sufficient working capital. Okay. So a company is running with those sufficient working capital. They are operating. They are producing certain items, targeted item, and they are selling. Now they are expanding. Now they are expanding. Earlier they had a sales target of say about 50 million. Now they want to go for the 75 million. The working capital which they had, that is money tied up in raw material, work in process, finished good, debtors and advance payment, is sufficient for that 50 million target. But now they are increasing to 75 million. What they have to do? They have to increase the working capital also correspondingly to achieve that target, the present target. To achieve that anticipated target, they have to increase the working capital also correspondingly. That means they have to increase the raw material, working process, finished good. Without increasing the working capital, if they increase the production or sales from 50 million to 75 million, what will happen? This working capital will get strained. The operation will get strained. Production will get strained. There may be breakups. There may be breaks. So that position is called as overtrading. Overtrading is a situation where increasing the production or sales without correspondingly increasing the working capital. Without correspondingly increasing the working capital, if any company increase their production and sale, then the company will get into this overtrading problem. So when there is overtrading, what will happen? There may be breaks, production breaks. And then again and again, they will run to the bank for the short-term facilities, overdrafts. Their check may get returned. They would have given checks to their suppliers of the raw material. They don't have funds. The check may get returned. And sometimes they may sell their goods at discounted price because they need the cash. They need the cash. To get the cash, they sell their products on a discounted price. So these are the problem. That problem is called as overtrading. So when the overtrading is there, if it is not managed, if it is not controlled, then the company will get into the liquidity problem, short of cash. So the working capital problem, this overtrading will lead to liquidity problem of the company. When the liquidity crisis come, then I have already told you, mentioned, in a short term, the company may collapse if it is not corrected. If the liquidity problem, that is, if the overtrading is not corrected, then it will lead to liquidity crisis, and the liquidity crisis will lead to the crash of the company. So you have to see whether the company is signs of overtrading. Signs of overtrading. So this is liquidity problem due to overtrading. Short of working capital. Short of working capital. Then similarly, adverse trading. Adverse trading, what will happen? Now the company is running, sales dropped. Sales dropped. When the sales drop, what will happen? Their income will drop. When the income, cash shortage. So that also will lead to liquidity crisis. Now earlier, overtrading, due to overtrading that led to liquidity crisis. Now income, sales dropped. Reduction in income after high fixed cost enterprises. Maybe sales dropped. So that will lead to liquidity problem. We call it adverse trading. Similarly, liquidity run due to reduction in sales. Liquidity problem. Then adverse trading, reduction in income after fixed high cost. So fixed cost is very high, variable cost may be there, fixed cost is, so the sales is unable to meet the fixed cost. So obviously, loss of income, reduced income, that also will lead to, that we call it adverse trading, that also will lead to liquidity crisis. So all these things, what are the overtrading, adverse trading, liquidity run, all will lead to liquidity crisis. This is an important thing, liquidity crisis. When there is a liquidity crisis, that company can get crashed, may crash in a short term, So you have to see whether any of these signs are there, whether signs of overtrading or adverse trading or liquidity run is there. You have to check at the time of your inspection. Then excessive capital commitment. That is, capital commitment is more because maybe the machine, plant and machinery, maybe a smaller plant and machinery would have been sufficient. Maybe at the cost of 50 million would have been sufficient to run this operation. But if they would have bought a very big machinery, that is maybe 100 million rupees, then wastage of capital, excessive capital commitment. Maybe their own money or borrowed money. Borrowed money means they have to pay the interest. If it is their own money, they may lose their interest. Otherwise, they would have kept in a fixed deposit with the bank and they can earn the interest. So instead of 50 million rupees worth of machinery, they have bought 100 million. That's also bad for the company, whether there is excessive capital commitment. Similarly, the 1,000 square feet building would have been sufficient to operate, but they would have constructed 2,500 square feet. Other balance area is idling, excessive capital commitment, you have to see. Maybe 5 lorries may be sufficient to transport their items. Maybe they may have 10 lorries, excessive capital commitment. So these things also you have to look at. Right. So now we have looked at the current assets, present asset position, the fixed asset, and then the current asset, and we are looking at the current liabilities. Level of operations. Level of operations. Production, sale, manpower. You have to get the information about this. Production, how is the production, present production, then the sales, Data, you have to collect sales figures. Then manpower utilization, workers utilization, you have to correct. Then power usage, how is the power usage? How many units, whether it is single phase or three-phase electricity, then the power usage, whether there is any bottlenecks, problem, prospects, potential for expansion, that you have to look at it. These bottlenecks and other things I will explain now. Now we pass on to next slide. I will explain you. New enterprise. Now the new enterprise or project inspection. New enterprise. Right. So in the new enterprise, they are going to start their venture in a new place. There may be sometime that maybe only the land may be there, other facilities may be there. Sometimes there may be buildings. Sometimes there may be buildings also there. They would have purchased some land together with the building. So whatever the thing, you have to inspect. You have to inspect and collect the information. So the location, the new location, whether there are any fixed assets, if available, land, building, plant and machinery, vehicle, other fixed assets, availability of utilities, then other factors. In the case of labor-intensive projects, industry, then the manpower availability. These things you have to look at it. Location of the enterprise. So it may be they would have found a new location for the enterprise. So you have to see access to the site. That is very important. Access to the site. So the land may be like this. The new location may be like this. There may be public road. There may be lane coming to this site. So access to the site you have to see. You get the details of the access to the site. If it is a export-oriented projects, maybe they export the items in big containers. The road should be sufficient enough for the container to come, and then after loading, return and go. The road should be sufficient enough, should be wide enough for a container, maybe 20 feet container or a 40 feet container, depending on the case that you have to look at it. Whether 20 feet container or 40 feet container to come to the site, load the thing, and to return and go. But sometimes the container may, you also would have oversight and you would have ignored it, or maybe that project proponent also would have ignored it. The facility is granted, the project is all established, and while transporting, the container cannot come through this way. They come and take the turn, and maybe, yes, then it's a problem. So depending on the nature of the project and what they are going to do, whether you decide the access of the site is good enough. Access of the site is good enough. That is one thing, access. In the transport facilities, whether sufficient transport facilities are available. Maybe the project may not have their own vehicle. They want to hire the vehicles and send. So whether the transport facilities are there. Or maybe they are planning to send their goods through the rail transport. Whether railway transport facility is there in the close by. Like that. So transport facilities, whether necessary transport facilities as anticipated is available closer to the site. So one is access to the site, whether it is satisfactory, and transport facilities to the site, whether available in the site or close by. Yes. Then the raw material supply line. Raw material supply line. The raw material is an important thing. So if the raw material may be imported or maybe local imports, local raw material they are using. Imported means, okay, yes, that is by ship or by air, it will come to the port and then it could be transported to the site. If the local raw material, then you have to establish raw material supply line is there, whether the raw material is available close by. Otherwise, they have to spend money on transport. A good example, I always say, in 1970s, paddy milling was concentrated through the political action. It was concentrated closer to the Colombo, because Colombo city is the consumer of rice. Colombo city is the major consumption of rice is by the Colombo city. So they established paddy mills closer to Colombo city, somewhere closer to Negombo, certain areas. There are so many paddy mills established. So they transported paddy from Polonnaruwa, Anuradhapura, Ambara by lorries, brought here. They milled the paddy and supplied the rice to the close by market, Colombo market. Colombo market is a major consumer of rice. This supply. It was going on here. Well, then the oil price suddenly increased. That oil producing countries, they have doubled the price that time. Suddenly increased. So transport cost increased. So paddy transportation cost also increased. What happened? When paddy is transported, paddy plus the husk, outer cover, both were transported. So transport cost is high. And then after milling, they were supplying rice only to the Colombo market. So they couldn't pay, they had to pay high transport cost. To match that one, they had to say increase the rice price. So the raw material supply was not there, supply line was not there in those paddy mills. Then paddy mills started in Polonnaruwa and Anuradhapura areas, where the paddy is grown and paddy is available. And then what happened? Those mills removed the husk and they transported only the rice. So transport cost is reduced. Because earlier, paddy with the husk it was transported, transport cost was high. Now the rice only transported, now the transport cost is low. So they were able to make the profit. After that, after establishing paddy mills in Ambara, Polonnaruwa and Anuradhapura districts, the paddy mills established in Colombo, closer to Colombo area, all closed, mostly closed. So when you are considering, see, raw material supply line, if they are using the local raw material, the project should be closer to the local availability of the local raw material. So you must, in raw material supply line should be established. You must look at it. So it is a critical point, critical factor. Risk factor, they didn't consider earlier. Right. Then labor availability. Then you must see the labor availability. If labor intensive projects, a good example, you all would have known the garment factories. Under 200 garment programs, the political, because of the political influence, so many factories, garment factories established all over Sri Lanka. They didn't look at the labor supply. Then what happened? Labor shortage come. So now certain factories are, now they are operating. What do? They send the vehicles to other districts, other areas to collect the laborers and bring to this site, the factory for the operation. This additional cost. So obviously cost of production will be high. Sometimes we may not be competitive in the international market because our cost of production is high. That is one reason due to labor shortage. And these factory owners have to send the vehicle to other areas to bring the labor for the work. So obviously cost will be high, production cost will be high. So that also you have to look at it, labor availability. If the project is labor intensive project, then the environment suitability. This is another important thing. Environment suitability. Environment should be conducive to the project. Environment should be conducive to the project. Certain areas I don't want to mention. The piggery farming. They were doing in large scale. They were doing piggery farming in large scale. But the piggery, that situation is very create bad smell. Unless suitable action is not taken, that create bad smell. So in the neighboring areas, people complain to the authorities. Ultimately, the piggery farm has been closed down. Environment. So in whatever the project, the environment suitability, you have to think about it. Environment suitability, you have to think. So this is only one example. In certain examples, in certain projects like paddy milling, that is parboiled rice, tambapuhal. That creates also bad smell. That creates also bad smell to the neighboring people. So they were complaining. So there are struggle going on. And then sawmill. The mill operation create big noise. The mill operation create big noise. That also problem. Noise pollution, air pollution, water pollution. And recently you would have heard certain thing in Gambhar district, rubber gloves manufacturing. So there are, of course, their water, wastewater from the production went and polluted the neighboring water sites, lakes and ponds, and people were using that water for various purposes, washing, washing, even drinking also. So when that water is polluted, they couldn't use. So there was a big problem. There was a big problem. I don't want to go into detail, but you may be aware. So this environment suitability is very, very important. You have to look at every time. So you have to, these are also collecting information. Whether this area, this particular is environmentally suitable for this venture, whether it is environmentally suitable for this project. We had to. So location of the enterprise. Right. Then the land. So first, of course, we must see whether the location is suitable for the project. Then the land. The land, extent of the land. What is the extent? What is the nature of the land? Yes, nature of the land means whether it is sandy land or whether it is undulating land, whether it is rocky land, whether it is somewhat hilly land, shrub jungle, or jungle with big trees. You have to. Whether land development is required, whether you need a land development is required. If it is a jungle land or shrub land, land has to be cleared. For that, you have to spend the money. And then, whether it is a undulating or hilly land, whether it has to be leveled, whether that you have to do some filling the land, leveling, whether the retaining wall has to be constructed. whether drainage, whether the drainage has to be established, whether it is waterlogging land, when it goes under water during the heavy rain, you have to look at it. Whether the land development is required, filling, leveling, retaining wall, draining, whether. So you have to see this one. Another person, he purchased a land in Puttalam area, from Puttalam to Anuradhapura Road, about 4 or 5 kilometers from Puttalam. Interior, he bought a land, established a dairy farm. He invested a lot of money, purchased many dairy cows, and it's a mixed farm. It is a mixed farm, coconut, banana, and a mixed farm. To see elephants comes and attack. Elephant infested area. And elephant comes, and so now he couldn't do anything. So now he had to spend more money to build a bund surrounding the land to prevent elephants' arrival, to prevent that one. He has to put some more people with other weapons to control elephant attack. So this has happened. This is, of course, a person who came from London. He went to this land. This land was developed by somebody earlier. He purchased this land with the intention of doing a mixed farm, with heavily investing on dairy farming. So at last, these are the problem. So you have to look at it. Wild elephant attack. Maybe some other wild elephant may be attacked. You have to look at it. Right. So see, these are some examples I am telling you. Then year of purchase. So when this land was purchased by the project proponent, what was the purchase price? And what is the current estimated price? What may be the current estimated price? You have to judge. So the land, extent or nature of the land, whether land development is required, filling, leveling, retaining wall, draining, year of purchase, purchase price, estimated current value, what is the current value? So these things we have to look at it. And whether there are any other risk factors involved with the land, like this elephant attack, whether in the heavy rain, whether it goes underwater, whether water could be obtained by tube wells or by open duct well. These things you have to. Sorry, 1 minute. Yeah, here of course, I didn't mention that one. About the utilities, availability of utilities also. Utilities. When we say utilities, water, electricity, communication, etc., etc. Whether those facilities are there. Now, those are very important facilities necessary for a project or for a venture. So you have to collect that information also. So water could be obtained from tube wells. Maybe depending on the nature of the land, nature of the project, you have to have about 2 or 3 tube wells or open duct well. And if the water is good for the purpose, this is another problem. A man has started a dairy farm. Initially, the water and everything is okay, but later they have found the salinity of the water salinity. That cannot be given to the animals. It will cause problems to the animal, health hazard. So now they are not using that water. They are transporting water by bowsers from some other places to this point. This is project site. They are transporting. There was another farm in Hambantota, Still that farm is in operation. The large scale farm they were running, that was a poultry farm. No water, so they are transporting water in bowsers. So what do you mean? These are additional expenses. Additional expenses. So the production cost will be high. They won't be able to. They won't be able to compete with other similar people because their production cost is high. So these things you have to look at it. Then similarly, then the electricity. Electricity, yeah, whether it is single phase or three phase, depending on the necessity. You have to, in some cases, then you have to fix a transformer. Some projects they need more current, more amperes they need. The present current supply is not sufficient for that production process of that company, that project. So they have to install a transformer at additional cost. So this also you have to look at it. Similarly, communication, telephone facilities. Now that is very essential now. On certain areas, even for the mobile phone, signals are not there. So each and everything you have to. So certain areas, one particular handphone signal is not there. Another handphone signal may be there. So depending on that one, they have to use the respective handphone facilities. So you have to look at it. Land. So here in the land, the utilities also you have to. Water, electricity, and communication. And internet facilities also very important nowadays. So we are doing a lot of things through the internet, and analyzing internet also very important to get additional information from the internet. So internet facility also should be there. In buildings and structures. So new site, maybe sometimes there may be buildings. Yeah, in that case, nature, mode of construction, approximate age of the building. What is the nature of the building? Mode of construction. Whether it is a farm building, whether it is for the farm purposes, farming purposes, farm building, or industrial building, factory building, then how it is constructed, the details, and what may be the approximate age when it was built. What is a floor area? It is a farm building or a factory building, production building, floor area. And what is a cubic area? If it is a storage building, length, breadth, and height, storage building. What is a cubic area? Then what is a construction value? How much they would have spent to construct this building at the time of construction? What may be the present value? What may be the present value? Then the utilities. Yes, again, utilities available with the buildings. Electricity, water, and then communication facilities. These things. You have to get the details. You have to get the details. Then plant layout. If they would have earlier, they would have run a business or production line. If they would have installed machineries earlier, then you take the plant layout, how the plant or machineries have been installed. We call it plant layout. Take the plant layout. Evident problems, if any. Whether there are any problems in the machineries or in the layout, whether there are any problem, evident problems, if any. Need for expansion. Whether that plant layout and the factory, whether they can expand it, putting some additional machinery, increasing the production capacity, whether they can increase, whether need for expansion, whether expansion is needed, is it possible? You have to judge. So these are also collecting information depending on the project. Machinery. We will have a short break. Now the time is 10:30, 10:29, 10:30. We meet by 10:45. We have a short break. Meet by 10:45. Okay. Thank you. Well, let us start now. Continue. Yeah, we have seen the buildings and the structures. This is collecting information for credit evaluation. This is from the inspection. Inspection, we are collecting information. So lastly, we have seen the buildings and structures. We have seen. Now we move on to the machinery and equipment. There may be machinery and equipment. So we look at what are the machineries available. Make, model, identification, number. So when the machineries are there, what are the make, what model, and some machineries there will be identification number. Like the vehicle, the chassis number. These machineries also, heavy machineries, there are identification numbers, you must get it. And then what is the install capacity of the machinery? What is the install capacity of the machinery? Install capacity. And then there is another capacity, utilized capacity. Install capacity means what is the maximum output of production? What is the maximum production from a machinery per unit of time? What is the maximum production? Or what is the maximum output from that machinery per unit of time? So if a machine can produce about 10,000 units per 8-hour shift, this is the maximum, the install capacity. So unit of time can be maybe hours, 8 hours per shift or per day, like that. There are some machines operate continuously. Some machines, of course, you have to give some break to operate. So depending on that one, per unit of time, what is the maximum output from the machinery? That is the install capacity. So this machinery is having an install capacity of 10,000 per 8 hours shift. Then the machinery is currently producing only 5,000 units per 8 hours shift. This machinery is currently producing only 5,000. That we call it utilized capacity. So this is the maximum capacity. This is what we are using, utilized capacity. Then capacity utilization. Capacity utilization. Capacity utilization. That is utilized capacity divided by installed capacity. That is 5,000 divided by 10,000 into percentage. So this is equal to 50%. Capacity utilization is 50%. So we know machinery, this is utilized under capacity, utilized. So when you are doing inspection, what is the install capacity of that particular machinery or plant? Then purchasing price, at what price it was purchased, what was the date, and what is the present value, purchase price, and what is the present value. Whether any service contract is available. Actually, the suppliers of the machines may enter with a contract with the buyer for the service, providing service. That we call it service contract. That also very important. Whether any service contract is available, you have to get that information. Then history of machine repairs. Whether there are a history of machine repair, whether this machine was repaired previously in that case, what is the history of machine repairs? So in certain places, in certain factories, they have records on this such and such date, this repair was done, like that, those reports will be there. So you must collect it, history of machine repairs. Evident technical problem. Currently, whether there are any technical problem with the machinery. Whether there are any technical problem with the machinery currently. That also you have to collect that information. So this is regarding machinery and equipment at the time of doing your inspection. Then the vehicles. Yeah, they may have the vehicles also. Now, what is the make, model, registration number of the vehicle? Whether it is Isuzu or what type of vehicle, what is the model, and what is the registration number. Then purchase price, what was the purchase price? Then what is the present value? You have to judge what may be the present value. Then state of repairs, the vehicle also, how is the repair condition? How is the condition, state of repairs? How many miles run? Those particulars. Right. That is regarding the vehicles. You get the information. Other fixed assets. Other fixed assets. So when we say other fixed asset, I have mentioned earlier, you would have seen the fixed asset, land, building, machinery, vehicles. These are the major fixed assets. All others we collectively say other fixed assets, like furnitures, office furnitures, equipments, then ancillary power, that is standby generator, and then air conditioners, fire extinguishers, tools, all these items, collectively we call it typewriters, computers, fax machines, photocopiers, all these things collectively we call other fixed assets. So what is the condition? You collect the information about those things. Furniture, office equipment, ancillary power, standby generator, air conditioners, fire extinguishers, tools, any other items. You collect those information. Then the inventory. You is a current assets, inventory, that include all type of stocks. That include, when we say inventory, that include all type of stocks. Then raw materials. So what are the raw material used for this production process? So take the various types of raw material. They may use various types of, now if you take soap powder manufacturing, there are about 10 items they are using. In the soap powder, there are 10 types of raw material they are using and mix and producing a good quality soap powder. In the case of soap liquid, washing soap liquid, they are using about 6 items, various type of 6 items. They are mixing and making the liquid soap item. So various types of raw material. So name one by one, what is the quantity, all those things you have to take. Then work in progress. Work in progress, you may know, but anyway, I am telling what is the meaning of work in progress or work in process. Both are correct. Work in progress or work in process. Artha Nivibanda. Nivibanda, make a Artha Nivibanda. Now raw material is there. Finished good is there. So when the raw material is processing, it is processing. In between, there are items. Now if you take fabric, ready, here the garments, finished good, shirt manufacturing, say shirt. So immediately shirt won't come. First of all, cut into pieces, different shapes, and then stitching, different stitching, and finally assembly. So there may be collars, cut and stitch separately. There may be body of the shirt, cut and stitch separately. There may be hands, cut and stitch separately. Then the buttonholes, then button, fixed. So these are we collectively called a work in progress or work in process. That means carry, finally assembled, ironed, and packed. That is a finished good shirt. So work in process in between. So there may be, depending on the nature of the production, various other things, what are the work in progress. In the case of garment, this is the work in progress, what I explained to you. Maybe in some other, now furnitures, they will have the planks and then they will make the legs, they will make the seats, they will make the back. So finally they assemble together. So those are the work in progress in the case of furniture manufacturing. Wooden furniture manufacturing, right? So raw material, work in progress, then the finished good. Yes. Apart from that, what are other consumable for this process? There may be other consumable, other item also they will purchase. They may have the stock, other consumable. So those details. Then packing materials. Yes, packing material. Details. Then quantity and value. So what is the quantity available as a stock and what is the value of those quantity? You must collect. Actually, they may have stock books in big factories for each raw material. They have the stock books when they purchase and how they have utilized it. By date, on that basis, they have stock books, stock maintaining books for the raw material. And similarly, on the other hand, for the finished good also, they have the stock. From those things, you can get this information. Quantity, what is the quantity available, what is the value. Then the obsolete stock, I have already told you. Obsolete stock means, well, their date would have been past, expiry date would have been past. That is one reason. Another one, cannot be used, maybe outdated. The fashion has gone. So they won't be selling that one. In the case of shirt and other garment, if the fashion is gone, you can't sell it. Obsolete stock. So then obsolete stock. But if the obsolete stock is there in the stock, in the inventory, if the obsolete stock is there, that will inflate the value. Current asset value will be more. It will be showing more current asset value inflate. So when you are looking, their current asset value is good, you may think, but that includes obsolete stock also. So what you have to do, you identify this obsolete stock, you have to separate them from the current assets. Inventory, current asset, you have to separate. Then the current asset value will come down to a realistic value. Then finished good. So what are the finished good? What is the quantity? Finished good. How is the quality? Whether quality is a problem, whether there is any problem in the quality of the finished good. Obviously, when the quality of the finished good is a problem, there is a problem, then the sale will get affected. People won't buy because of poor quality. So you have to judge whether this finished good, how is the quality. Then the sales, how is the sale, whether there are any sale problem. So this, by inspection also, you are gathering information. So these are the risk factors. Finally, all these things will contribute to your decision making. All this information will contribute to your decision making, whether yes or no. So these are also inspection, also gathering information for you to do your decision. So one by one, right. Then the debtors. Yeah, as I explained to you earlier. Now, this company is selling its products on credit. So there may be debtors, trade receivable. So that is debtors. Yeah, maybe. Then position at cost. What is the debtors position? When you do the one, you should not include the profitable margin, the at cost. At cost, what is the debtors at cost? So you must position at cost. Debtors value at cost. Then you have to do the age analysis, depending. What is these customers' trading credit terms? What is this company's credit term? That is, they are selling the item to their customers on 30 days credit, or 45 days credit, or 60 days credit, or sometimes 3 months credit also they provide. So whatever it is, what is the term of credit term of this particular company, your customer company, to its customers? And whether they are giving 50% credit or 100% credit. Based on that one, sometimes when you analyze the debtors, they are maybe outstanding for more than 3 months. But this customer's credit term is maximum 3 months. There may be cases overdue for more than 3 months. So do age analysis and separate. Otherwise, this also will inflate if those overdue or past due customers are there in the debtors list, then that will inflate the debtors value. Automatically, that will inflate the current asset value. So you have to do the age analysis and separate. Then only it will be a realistic current asset value you will get. Right. Then debt collection system. How is the debt collection system? How they are giving on. Then how they are collecting their debts. Through any debt collectors, they have their debt collectors to go and collect the debts from the customers. Or they are maybe handing over to the factoring companies, factoring company. So they collect the debt, whether these people are collecting post-dated check from the customers, then they bank it on the debts for collection of post-dated check for the sales. So you have to analyze it. You have to get and see whether there is spiraling of debtors. That is, whether the debtors are increasing. Number and amount of debtors are increasing. What will be the outcome? Anyone please answer me. Today I have discussed about this matter. If the debtors are increasing, what may be the outcome? Anyone please just think about and answer my question. I hope spiraling debtors mean the company is selling, the number of debtors and the amount is increasing, spiraling, increasing. What will happen if it goes on unchecked? What will happen to the company if it goes on unchecked? Anyone please think and tell me.
This effect for the liquidity, no?
Sorry, please. Yeah, repeat it. What is it?
For the liquidities.
Very good, very good, very good. Yes, that's what I expected. Very good, very good. Yes, what will happen? Increase in the debtors. Amount is so, yeah, well, the sale is increasing. Sale is increasing. Production is increasing. Sale is increasing. Correspondingly, they would have increased their working capital. We have discussed today. So if it is there, then it will lead to over trading, and then as our friend said, it is liquidity. Liquidity will get affected. So when the debtors number and amount is increasing, it will going to affect the liquidity of the company. Very good. Thank you very much. May I know your name, please?
I am Vijita. Vijita Bandar.
So from which bank?
I am Cambridge Finance.
Sorry?
I am Cambridge Finance.
Oh, yes. Very good. Very good. Vijita, very good. Thank you. Thank you. Yes. So this will affect the liquidity of the company, that production. Okay. Debtors. Then creditors. We have seen that one also today. The people give items, raw material to this company and credit. That is, those are creditors. So this company also borrowing for their purchasing, for the purchasing of raw material. They get the credit from the suppliers. Then the age analysis, whether these people are paying their creditors regularly, payment history. See, whether they are good in their payment, whether they are paying their creditors regularly, whether there are any age analysis you have to do for this one also. There is overdue payment, whether they are delaying the payment. So if they delay their payment, what will happen? The suppliers may reluctant to supply in time. So that may there supply disruption. If these people are paying their creditors regularly, then of course there won't be any supply disruption. If these people delay their payment, obviously there will be supply disruption. Supply of raw materials may get delayed. There may be disruptions. That also you have to analyze and collect the information. Creditors. Then the workforce. How is the workforce? So that also you have to collect. That is very important. Workers are the important human resource. Workers are the important human resource for any factories or industries. Number in each category. There may be various categories. Skilled workers, unskilled workers, supervisors, like that, casual workers, various categories. So what is the number in each category of workers? How about their wage rates? How much these people are paying for them? Per day basis or per month basis? How about that? Mode of payment, how do they pay them? Whether they pay them daily or whether they weekly payment or 2 weeks payment or monthly payment or no payment at all. You have to collect. And then overcrowded. Whether there are overcrowded workers at the factory. So that is very bad, overcrowded. I may tell you, there was a poultry farm in down south. That owner was a very nice man from the area. Whoever goes from the area and asks for the work, okay, you come and work in my farm. He says, ultimately, the number of workers is more than the number of birds in the farm. Ultimately, number of workers in the farm is more than, and ultimately the farm was closed. Because they won't be able to pay. So overcrowded, that also you have to look at it. Whether the number of workers are more than the required, more than the cadre requirement. And labor shortage. On the other hand, there may be labor shortage. Really, most of the garment factories are facing this problem. Labor shortage at various categories, they are facing this problem. So that also very bad. So you have to check that one and get the relevant information about the workforce. In the management team, that is also another important asset. Position and numbers. Position, so whether there is a production manager, marketing manager, accounting manager or accountant, administration manager, human resource manager, whether they are conducting any training, in that case, training manager, and then the CEO. So those position and numbers you must get. Workers, the management team, and the experience of individual, each person. What is the experience? What are their qualifications? Those are very important. And then how much they are paid, their salaries. What are the other fringe benefits they are getting? You have to get. And then interpersonal relationship. What is the interpersonal relationship among the management team? There should be interpersonal. The interpersonal relationship should be sound. Then only they can achieve. If it is not sound, if cutthroating, one person is cutthroat, the other one among the management team, then the company will be affected. So you have to judge how is the interpersonal relationship among the management team members. You have to get that information. In the operation. So if it is an industry, how is the operation? Really, this operation you have to study. Now, as a credit officer, we can't expect you to know each and everything, each and every industry. No. You may master in 1 or 2 industries. So when the time comes only, you will be able to learn about the other industries. But you must learn, and you must know where to collect the relevant information about those particular industry. Technical matters are important. So if you are not aware of the technical matters in regard to a particular industry, you must consult somebody who knows about that industry. Collect the information. And there is the industry, the important thing, production process. Not only industry, even in agriculture practices, cultivation practices. In the case of industry, we call it production process. In the case of agriculture, we call it cultivation practices. How to grow pineapple, how to grow mango, how to grow banana, how to grow paddy, how to grow chilies, how to grow onion. cultivation practices, how to grow ornamental plants, flower plant, roses, anthurium. So these things, of course, everything you may not know. But you must know how to collect that information, from where to collect that information, depending on the necessity. So when one customer is coming for the export of plants, anthuriums, to some other countries, he won't establish. He is asking for a loan facility. So you have to assess, evaluate. So in that case, you have to study how to cultivate anthurium plants, how to harvest, how to pack it, how to export. You may not know, but you have to collect that. You have to collect from the reliable, some consultant. You have to collect. So the production process. One example. I generally do this production process example. Paddy farming. Not the farming, paddy processing. Paddy processing. Production process, you must know. In the case of industry. In the case of industry, it is production process. In the case of agriculture, it is cultivation practices. You must know. So cultivation practices, how to prepare the land, how many times that we plowed, it has to be leveled, it has to be tilled, and then in the case of some cultivation, your cow dung manure you have to apply, or compost manure you have to apply, then plow, and then you have to, if it is banana, then digging the holes, what length and what breadth you have to dig the holes. All those things you have to. In the case of agricultural cultivation practices. Now we do a production process, paddy milling. Oh, paddy. The paddy stores is there. Paddy stores. One example I am doing, but in all, whatever the industry, you must get the production process of that industry. How that particular product is produced. That is the production process. Plastic item, yeah, you must know the production process of plastic item. You must know. Soap item, how the production process of soap item. Noodles, food industry, how to produce the noodle production process. You must know. Now, actually, now you may not know, but when the opportunity comes, you have to collect those information. Right. So, paddy stores. Paddy stock is there. Paddy would have come from the farms. So obviously, the paddy may be mixed with the small stones and sand and debris. It will be there. So if you straight away you put it for hulling, then your rice also may get all these nonsense. So what you have to do, you have to separate these unwanted things. So now what you are going to do, you are sending through the paddy through a stone separator. There is a machine called stone separator. R-A-T-O-R, stone separator. So depending on the stones and debris and sand, if it is heavy, then you may have to use two. This also stone separator, this also stone separator. Two stone separators. Right, now the paddy is coming free of stones and maybe small, still some stones may be there, and the sand. Now you can send it through, yes, the huller, we call it huller. Huller. This will pound the paddy and remove the husk, outer cover. The husk is a byproduct coming. Husk. Now the paddy, now the rice is coming here. Sambar rice is coming. Still sometimes some stone sand may be there. Use another stone separator. Right. Now the rice is without any stone or sand is coming. Rice. Sometimes colored particles may be there in the rice. Samba hal means it should be pure white hal, white rice. Sometimes there may be colored particles, yellow and black particle. So that also should be removed for to increase the quality of the rice you had. So there is another machine called color separator. Color separator. That removes the color particles. Now the rice is coming. And some people prefer, most of the people prefer, it is the outer polished rice, polished. So the rice should be polished. So there is a polisher machine. Rice is polished. Now the good quality rice has come. Now what will you do? You will send it to the weighing, WEI, weighing and packing machine. After that, it will go to the finished goods stores. Finished goods stores. Stores. Here the raw material stores, that is the raw material store, and ultimately finished good rice stores. It will go there. So this is, we call it production process of raw rice. This is for raw rice production process. And in this production process, so we call it production process flow chart. We call it production process flow chart. Production process flow chart. So now we know what are the machineries needed and the layout of the machineries, how to lay out these machinery. And in that case, so what is the extent of flow area required? What is the extent of flow area you require to lay these machineries? All these things you know. You can plan it from this production process flow chart. Apart from that, capacity of this machinery. So this is paddy stores, this is stone separators. So this has 10 metric ton per hour capacity. This also 10 metric ton per hour capacity. So 10 coming. So this is of course 15 metric ton per hour capacity. This is 8 ton per hour capacity. This is 10 ton per hour capacity. And this polisher also may be 10 ton per hour capacity, like that. And the weighing packing also 10 ton per hour capacity. These are the capacity. That is install capacity of the machinery. Now when we send the paddy from here 10 metric ton, okay. Here 10 metric ton, okay, it is coming 10 metric ton per hour. So here 15 metric ton over capacity. Capacity is more. Anyway, 10 metric ton only come here. So when it comes here, this is 8 ton capacity. 8 ton. What will happen? So 15 metric ton allows 10 metric ton in this process, and when it is coming, it is 8 ton. The rice won't go through entirely. This is going to be a bottleneck. So here the excess rice will get accumulated here. It is like when we go in the vehicle, the road, wider road, going, it's a heavy traffic time, wider road, lot of vehicles going, but there is a narrow bridge. What will happen? Some of the vehicle have to, yes, it getting slowed. Almost all the vehicle will getting slowed. It will allow only a few vehicles to pass on. We call it bottleneck. Similarly, here though if the engines come, since the capacity of the machinery is 8, other rice won't go. It will get accumulated here, bottleneck. So this situation we call it machinery imbalanced. Machinery imbalanced. So then here thereafter only 8 ton. Here also 10 ton, no use, only 8 ton will go. This also 10 ton, no use, only 8 ton will go. Then so here ultimately 8 ton only come here. So in order to avoid bottleneck, here we had to, though it is 10 metric ton, we had to reduce the quantity of paddy sending. Then only without the bottleneck it will pass on, but finally you will get only 8 ton rice per hour. So we call it capacity imbalance. Capacity imbalance. So what we had to do? We had to do capacity balancing. Capacity balancing. Need machinery balancing, we call it. So install capacity and utilize capacity, I have told you. Now bottlenecks in processing. Bottlenecks in processing need machinery balancing. Whether there is any other process problem, you have to find it. So here average daily production or turnover, how much? 8 tons per hour, 8-hour working shift. So 8 into 8, 64 tons per day production. So based on this one, you can plan it. So what is the flow area requirement? And based on the daily production, how many tons of paddy you have to keep it here, and how many tons of rice you have to keep it here. So based on that one, you can plan your storage capacity. And on the whole, you can plan what is the land requirement. What is the land requirement? You can plan. All those things you can plan. So this is, and apart from that, I must tell you now, here these are the modern paddy mill. It will have this type of machineries. And from one machinery to other machinery, there may be elevators. So from here, the paddy, after removing the stone, it will be through elevators, it will come here. From here, elevators. From here, elevators. From here, all these things, elevators. So, based on that one, this machinery, what is the electricity usage? Each machinery, what is the electricity? Kilowatt hour. What is the electricity usage? Kilowatt hour. Total it up. And what is the electricity usage by these elevators? Total it up. So what is your total electricity requirement? Kilowatt hour. What is the total? You can plan it. You can plan. On that basis, you can do your projected costing also. Projected costing also, you can, what is the electricity usage per day, per month? What is the cost of the electricity? Everything you can do. And some, these are fully automatic. These are fully automatic. Some may be semi-automatic. Certain things are on elevators and certain things on by manual labor. And certain industries, certain maybe this paddy processing may be completely manual. That is from one machine to other machine manually transferred. So depending on that one, you can correct the information process. Okay, right. Average daily production and turnover based on this one. Capacity, you can. That is another one. So is it rice? Raw rice mill. So if it is parboiled rice mill, so those days parboiled rice mill, what do they do? The paddy, they put it in big utensils and boil with the water. They boil. They steam, boil the rice, the paddy. After boiling, they put it on the yard, big yard, cemented yards there for drying. About 2 or 3 days, they soak the paddy in water. After soaking, they boil the paddy in water again. After boiling, they remove the paddy and put it on the yard, cemented yard for air drying, by sun drying. By sun drying. After that only they take it and put the huller. Put the huller for removing the husk. Then the process will go on. This is those days. But now there are new method go to prepare the parboiled rice. Now it is steam rice. Now steam rice production we call it steam. So here they are having big boilers. Boiler producing steam. Steam, water steam, steam vapors. Right. And then this is on one side. So I write separately, I draw this one. Now there are tanks. With water. So this paddy will be sent to this tank for soaking tanks. Two to three days. Soaking tank. Paddy will be soaked. After removing the stones and everything, paddy will be soaked in there. Right. Then after that, there are funnel-shaped big apparatus. Funnel-shaped big apparatus or utensils. Funnel-shaped. After soaking for 2 to 3 days, the paddy will be transferred from here to here. These are funnels. Paddy will be transferred. Then the steam production is there. Steam. This is boilers, big boilers. Recently also, somewhere the boiler get blasted and 2 people died. So when you are using the boilers, you have to be very, very careful. Maintenance is very important. It may accident. So this is another risk factors. In that case, the factory owners have to pay compensation to the dead people, their dependents. So this is another risk. Recently you read in papers, a boiler somewhere closer to Colombo. It got blasted. 2 people, Indian workers, died. So this is another risk element you have to think while processing these applications. Risk elements, right? So steam production. The steam will be passed into these funnel this way. This will be done for a few minutes, 2 to 3 minutes. Then the steam will go and steam the paddy. If you send the steam for more, maybe about half an hour, you will get the bath. You will get the rice on bath. So you have to limit this. Then after that, you remove the paddy, steam the paddy and send to the huller. And then you remove it and send to the huller. Then the process will go on. You produce, this way you produce parboiled rice or the steamed rice. So there are 2 types of rice. One is raw rice, other one is steamed rice. Yeah, this is the production process you must know. Similarly, any production activity, you must know the production process. Okay, I want to ask one question. Now the working capital. So from this one, you can just the working capital requirement also. Now you need working more. Which one need more working capital? Whether the raw rice production or parboiled rice production. Which rice need more working capital? Which production? Parboiled rice production or raw rice production need more working capital? Today I have told you about the working capital also, the current assets I have told you. Somebody? Why nobody is there?
Steam boilers?
Sorry?
Steam boilers?
Very good, very good, very good. Yes. So it is simple because why? Here you need more current assets. The steam rise production, you need current, and there will be delay now. Actually, not delay. The more time you need it. You about 2-3 days you have to put the rice paddy in soaking in water. So your current asset stock may be more. Working process is more. So for the steam rice production, you need more working capital than the raw rice production. Okay, very good. Thank you. Right. So now go on. Average daily production turnover. Then sales and production statistics. You must have how much is production per day or per month. What is the sales? Those statistics you have to get. Now, because to see whether your produced item is sold in the market. Otherwise, again, you produce more, again, the liquidity problem. You won't be able to sell, then running short of cash, then liquidity problem. So sales and production statistics you have to collect. Whether the production is sold. Then service billing. Yes, but the servicing, whether the billing is okay, whether they are paying the services, billing. Then the wage records, various types of workers, their wage records, whether it is available. Then the statutory obligation. Statutory means legal obligation, whether these companies doing, whether satisfactorily they are obliged to do this, whether they are doing their statutory obligations. Statutory obligations mean PF payment, ETF payment, EPF payment, ETF payment, and the tax payment, statutory payment. So whether they are doing, yes, regularly, the statutory obligation, they have, whether they are fulfilled. Then based on that one, what is the future prospect? Based on that one, what is the future prospect for this industry? You have to. So based on this information, you analyze and you judge the future prospect. Points to remember. So when you do the inspection, you have to remember. Take down notes in the field visit book during the visit. Yes, you take a book. You can keep it in the mind. Then and there you have to write. Write the report immediately after return, after coming. Don't postpone because again you may forget. So then and there you complete the report, write the report, and for report writing you have a format. Set the format yourself like this. Yeah. Purpose of visit. What's the place of visit? Address of the visit, date and time of the visit, who have accompanied you, those details, your observation, and like that you have to prepare your inspection report. So you have to set the format for the report. So this is anyway, yes. Add incomplete, yes, please wait. So these are the things, your inspection. So today we have discussed various things, how to collect, where to collect the information regarding a particular customer, his project or his venture or his business, and where you must know where to collect depending on the business. So many things, and there of course the interview, how to conduct the interview, and importantly the inspection. Sometimes people go and inspection, just look and listen coming. No, so you have to do it thoroughly. These inspections you have to carry out. So this is from our experience, how to do the inspection, what things you have to look at it. You won't get this type of things anywhere. So these are from our experience. We are giving you how to collect this information by inspection. Okay, so I hope you will understand, you will follow it properly. Now, another thing I must is, last class I have told you about the CRIP report and the credit scoring. Now the credit scoring is implemented by the CRIP, Credit Information Bureau. By going through their website, you can collect this information about the credit score, credit score, you can collect this information. Last class, I have explained the basis of credit scoring, the FICO scores, how it is developed in USA, America, which was the first company who have developed, how they have developed, I have discussed. And later, there are some other companies also now, they have their credit scores, like Experience, like that. There are other companies also have their credit score. So now the credit score system is almost everywhere in the world, globally, it is being used for the bank or the institution to decide whether they can grant facility to your customer. For that purpose, but sometimes this credit score failed. Actually, what happened in America for granting of housing loans sometime back, they used this credit score. They used, but there was some failures. Some people defaulted. Though they said based on the credit score, they will repay, though they thought and grant the facility, they defaulted. For the defaulting, there may be some other reason maybe there, which they haven't looked at. Those reasons may be there. But anyway, now the credit score system is used by almost all institutions globally. So now in our country also, we are using it. CRIP has introduced this. So CRIP's, if you go through the CRIP website, these information are there. So you have to read it. But one thing I am telling you, now see, CRIP score report, they call it as CRIP score report. The credit score, the CRIP is providing is CRIP score report. The credit score, which is issued by Credit Information Bureau of Sri Lanka on request of the person to whom such information relate to, is known as CRIP score report. Credit score is calculated by the algorithm and based on following key aspects. Actually, the CRIP in coordination with the assistance of some Irish company, they have developed this CRIP credit score they have introduced. So, based on the following key aspects, the score is based on the following key aspects. Look at it: payment behavior, how the customer paid in the past, his past behavior, payment behavior, over-indebtedness, demographic details, utilization of available credit, inquiries, whether this customer is inquiring, current date contacts, dishonored checks. And then they say credit score is a 3-digit number which ranging from 250 to 900. So in the FICO scores is going from 350 to 800. So, but here CRIP score is ranging from 250 to 900. The higher credit score leads to lower credit risk. So when a customer is having a higher credit score, he is thought to be, he is less risky to the lending institution. He is less risky. The higher credit score leads to lower credit risk to the lenders. And similarly, lower credit score leads to higher credit risk. If the credit score is low, then that will have a higher credit risk. Similar to your self-inquiry report, that they call it I-report, credit report. We used to call CRIP report, they call it as I-report, self-inquiry report. That is, if I am asking from the CRIP to provide my CRIP report, they call it I-report. Credit score also charge over time due to updates and change over time due to updates and changes in credit data. So this credit score also from time to time, it may get changed depending on the credit behavior of the customer. So there are all relevant information are given. So please go through the CRIP website, collect this information, because now in our country, this CRIP report, this CRIP credit score system is being adapted and followed. So you should know about this one. You may get a question also on this credit score, CRIP credit score. So you have to be familiar with this CRIP credit score system. how to apply, how to get all those things. So before going to the bank, you know your credit score. If you know your credit score, then you know, yes, I can go to the bank. They will consider my application. Or if the credit score is low, better without going to bank and wasting my time, I can go home and sit. You can. So how to collect this credit score from the credit? So all these details you must know. As a credit officer, now it is very important. But the basis of credit score, how it developed and everything, on the previous lecture, I have explained. So now in our country, I told you in India about 5 or 6 years back, they have introduced FICO scores. They had that FICO office also in Bangalore. They had the FICO scores. They have started. But now we are starting in Sri Lanka. And in addition, I have told you, that they are going to include the utility payments also in the credits, in the CRIP report. Customers, utility payment behavior also there. And based on that one also, the CRIP score also, credit score will get changed. That will affect the credit score. So please, you all go through this CRIP website and collect this information. Basically, I have explained everything. Now you should know only how is our CRIP is introducing this CRIP credit score system. That also basically I have explained you. So more details you can get it from the CRIP website. Okay. Thank you very much. I have told you, if you have any doubts or anything, at any time you can contact me. But thank God nobody has so far contacted. No one has contacted. Or maybe good. I hope you all understood it. Okay. Thank you. Thank you very much. I will meet you some other time, maybe later. But in between, if you have any questions or anything, at any time you can contact me. Okay. Thank you. Thank you very much. Thank you.